So I believe for the Malaysian investors here, we have known that Oriental Kopi is going for IPO. Yeah. So Malaysians, especially in the Klang Valley area, would have known this F&B brand, Oriental Kopi. Okay. So this video, I will be telling you guys everything you need to know about IPO and see whether this company is worth investing or not. Yeah. So whenever we want to invest in a company, especially in for if you decided to invest in the IPO, right? You need to ask these questions, okay, a few of these questions. So how do they use the IPO proceeds? Okay, then are they using our funds efficiently? The reason they want to go IPO is to raise funds, right? So we need to analyze whether are they using our funds, in an efficient manner to grow the business and grow our money. Yeah. Then need to see signs whether the company can grow bigger and better. Will the shares get more and more valuable? Yeah, because when you invest in the stock, you own the shares, right? You want the shares to get more valuable so that the share price can go up sustainably. All right. And then finally, of course, okay, in this video, what I'm sharing here is the point of view of a stock investor. Yeah, so I understand there are some investors, they are playing different strategies. Yeah, they want to subscribe, okay, before they go to IPO through the balloting process, and then when they listed already, the price they hope can go up, and then they want to sell it off. Okay, so okay, this type of strategy here, okay, I won't be commenting anything about it, okay, because I'm not giving my view as a speculator or trader. Everything I'm sharing here is the point of view of an investor. All right, so let's get started. So the first thing is, of course, let's talk about their business. Very, very simple. You go to, let's say, Mid Valley, all right, or even Sangmi Pyramid, you definitely have seen this, how to say, this, their business lah, okay? So Oriental Kopi is a F&B business, selling, local foods and stuff lah, yeah? And these are a few pictures of their cafes, okay? So who are the people? Okay, who are the people managing them? So the one I highlighted are the main and important, key people in this company lah. Yeah, Dato Chan Yan Ming, okay, Kwa Song Ling. All right, they are the directors. Okay, there are only 3 directors, so quite a lean management. Okay, and then the head chef. Head chef is very important, all right, because he's the brains, okay, behind the quality of the food. How tasteful is it and how delicious is it? Okay, right. So when going to IPO, we want to know, who are the ones that owns the shares, okay, in this company. So you see, this company, they go IPO, they'll be in the ACE market. So ACE market are more for the new companies, and then more smaller cap companies, right? So you see this company, all right, the management, after the public issue, they are holding this much of shares. Okay, Dato Chan is the one holding 42%, and the next two holding 15 and 10%. But eventually, okay, when they go listed, right, they will be holding under a holding company called United Gomex. All right. So they hold the shares through a holding company. And this holding company will hold a total of 73.35%. Yeah, so you need to know that. Yeah. So this percentage is based on what? The total shares available. Okay, after the IPO. So their shares, total shares, they have 2 billion shares. Yeah, 2 billion shares. So United Gomex, okay, you'll be holding 1.466 billion shares. Yeah, so the rest of it, okay, will be for the public lah. Yeah, so the main business as usual, right, is the F&B business. This is the main one. They also do distribution and retail. Yeah, currently they have 14 cafes. Yeah, that means the one that serves food to the customers one. And they have one retail store. That means they sell their internal products one. Okay, they have one. Okay, so you see, when we want to understand the business, we want to see which one are the main revenue generator. Okay, so based on their prospectus, okay, their F&B business, the coffee chain is the one that contributes the majority of it. Okay, 98%, and then 94% for their past 3 years. So when we look at it, in order for this company to grow, the most important factor is they need to grow their cafes. Very simple already. Very clear cut. You want the company to grow bigger, the most important thing is their cafe chain. Yeah. Then of course I understand they do have their retail, to sell off their consumer branded packaged goods lah. But it's a very, very small percentage. 1%, 1%, and 2.2%. Right. So for the short to mid term, all right, in order to see substantial growth, make sure the company get bigger, it's important to focus on their cafe chains lah. Yeah. Of course, as time goes by, hopefully, this segment here will contribute a meaningful total revenue growth to the business lah. Okay. Yeah, this is a whole total summary picture for you guys to take a look at. The black color here, yeah, the cafe chain operations, 98%, 98%, and then 94%. All right. Okay, let's go to the next one. So currently, right, they already told us they have 14 cafes in total. So this company, I would say, is still in a very early stage. Okay, they can continue to grow a long runway, because if you can see, for example, okay, like Secret Recipe or even Old Town White Coffee, right? They have, I think, if I'm not wrong, around 200, okay, 200 cafes right now. Okay, but of course, okay, I understand it's a bit unfair comparison, you see, because Oriental Kopi, they own the whole cafe itself, right? Secret Recipe and Old Town White Coffee are based on franchise. Yeah, but what I want to tell you is that there is a potential for them, okay, to grow more and more. Okay, so that they have a lot of runway still. Yeah. So currently they have 14. Okay. Let's go to the financials now. Now, in terms of financials, okay, not bad. Okay, they've been growing really, really fast. Okay, and growing from 5 million okay to 133 million. And then not only that, they can make themselves showing profitability. Okay, so it seems it's quite a well-managed business. Right? I mean, because F&B is not easy. Okay, F&B, I understand it's quite not an easy business. Okay. So to see them, they are able to show profitability and then continue to grow like that. Okay, not bad. Yeah. Then as I go through, okay, and their prospectus, there are a few things that we need to be careful on. That is their margins. Yeah. Despite if you look at it like that, they're growing fast, they're growing, a lot, but we need to look at it the margin also. Okay. Because you see from 2022 to 2023, their gross profit margin somehow declined. All right. And if you go back down to the profit before tax, the margins from 25% drop to 20%. Now, when we look at it like this, that means there's certain pressure, cost pressure already onto their business within this 1 year. Now, it's not surprising, of course. Not surprising, of course, you see, because through the explanation in their prospectus, right, despite the increase, overall gross profit margin decreased. Okay, why? From 32 to 29% here. 32 to 29, right? Why is that? Very simple. It's because of their material cost, ingredients. Because F&B, their food, their raw materials, okay, beverages, ingredients, all increase due to inflation. I think Malaysians here, we all know everything has been going up the price. Yeah. And not only that, their labor costs also. Okay. Mainly is because, you know why? Because there's been an enforcement of the maximum working hours. It's actually reduced already. They reduce it. So in order for the workers, okay, to work more than that, right, they need to pay them overtime. Yeah, because of this, right, there's a pressure on their expenses already, the costs and expenses. So this is something that we need to take note, how the management is able to control this, all right, so that we won't let the margin get thinner and thinner. When you get thinner and thinner, net profit will get lower and lower, then it's not good for the shareholders. Okay, so let's see later how they're going to tackle this, all right? So yeah, starting the news, especially right now, okay, diesels going up, right? We all know this to $3.35 already. So there's been a lot of news saying that, business owners, they want to hike the price, wholesalers and suppliers also raising the prices. So there will be a lot of cost pressure, okay, for this F&B business. Okay. Now, let's look at the cash flow. Now, cash flow, as you all know, are the real cash at hand, okay, when they run the business. Now, I must see that it's really, really good, quite healthy. So if you see from their latest year, 2023, right, their net cash from operating activities around 35 million, 35.5. So these are the net cash. Then after the minus from how they invest in the business, and then financing activities, right, they can still, have 11.5 million. So it shows us at least this business is self-sustainable. It's not a losing, money losing, loss-making company. No, they have a capability to generate positive cash. Yeah, because every single year you can see, can net increase in the cash. They clear 298,000, then increase to 12 million. Then the next year they get to increase to 11.5 million. Yeah, so no issue with us lah. Yeah. Then what else? Okay, so in terms of the investing activities, right, that means what they do, okay, to sustain the business. So we can see here that they spend around 13.64 million, okay, on their PPE, property, plant and equipment, or you can say it as a capex. They spend 13.64 million to, let's say, maintain the current cafe or to grow new cafes. Yeah, so this is the amount here. Then financing activities, so they pay dividends of 8 million and then lease liabilities. So I believe that a lot of their cafes are rented out. Okay, are rented from one. Yeah, so they need to pay. Yeah. Now, there's one thing I need to highlight to you guys. Okay, which I'll give my own opinion on this, and that is the payment of dividends. Now, this is a bit that me as a stock investor, right, I'm a bit disagreeable. All right, in the early years of a business, and you are going IPO, you want to grow the company, right? Paying a bit dividends here, it is a little bit, I would say, opportunity cost over the long run. I will explain later why. Okay, so I just want to highlight to you guys here. So let's move on to sustainability, which means how long can the business sustain? When we invest in the business, we don't want the company to immediately go bankrupt, right? So we go through their balance sheet. Very simple. I just want to check their current assets and the cash. Okay, so we want to see their current assets. Okay, can they pay off their current liabilities, which is liabilities that is less than 1 year, they need to pay one, right? So as we compare it, their current ratio is 1.29 times. What does it tell us? It means that this company can pay back their current liabilities 1.29 times. Yeah, so at least it's more lah, it's safe. But the thing is, okay, their cash balances, despite 24.8 million, okay, you need to understand their current liabilities here is how much. Yes, current liabilities here is 28 million. So their cash ratio is 0.9 times. Now, if based on like that, okay, based on our standard, right, I would say this business is walking on a tightrope lah. Yeah, because they can only sustain themselves for slightly around 1 year only. Okay, but of course, I think if they go to IPO, okay, they will be get new fresh funds lah. So I believe they will continue to sustain. Okay, so this is something that we shareholders need to take note of. Yeah. Now, the next thing, the most important one, the IPO purpose. Whenever a company go IPO, we want to go and invest. Very, very important to know the main reason why are they going IPO and how they use our money. All right. So let's go through it right now. So when they go to public issue, right, they'll be issuing 418 million shares. 580 million. So for us, the Malaysian public, how many are allocated to us? Now, let me tell you, because you are investing in a smaller company, an ACE market, right? Okay, so there's much slightly higher risk. So you need to understand for the Malaysian public, it's only around allocated 3% to us. All right. Eligible persons, 1%, which means the people that employs the directors inside there. And then private placement to selected investors. Maybe internally, okay, they have discussions with other selected investors. Okay, these shares will be given to them. Okay, so it's 4.4%. And then, of course, 12.5% will be given to the private placement, selected to Bumiputera investors. Okay, so in total, okay, when you invest in this company, the public float, okay, which means shares owned technically by the public one, right? Right, is actually only 20.9%. So when you invest in this kind of company, take note that it is very low liquidity, okay, very low volume. Yeah, so it will definitely affect the shares that you want to buy or sell, because there's not enough, perhaps not enough shares, okay, for certain investors. Yeah, so 20.9% is quite low. It's quite a low threshold lah, but it's nothing surprising because it's the ACE market. All right, so this is one thing you need to take note. Then after IPO, all right, you want to know in total who hold how many shares. So in total, okay, the main insiders, like I said here, I already explained just now through the United Gomex, right? In total, okay, they hold 73%. So they hold quite a bunch of it, a bunch of the shares. Then the public shareholders and others, they hold 20 to 25% here. Okay, so this is what you need to know. Now, the use of the proceeds. So when we analyze through the how they use the proceeds, right? We can roughly see, okay, the direction of the company already. Yeah. So the one I highlighted in red here is the ones that's important to me. Why? Because I want you to give me signs to show me that you can grow more. Okay, you can open more cafes. So the first one, set up of new head office, central kitchen, and the warehouse. Okay, and then not only that, they also want to expand cafes. So it's good. Okay, maybe you want to set up a central kitchen, can make it more efficient, then you want to grow. So the only bad thing here is that they don't give us details on the percentage amount. How much did you allocate? Okay, for this? Because I personally, I want them to focus more, okay, from the IPO proceeds on this, the expansion of cafes in various states within Malaysia, because that's the growth driver for this company. 98%, okay, revenue comes from this. So if you want them to show substantial growth, they need to focus a lot on this. But currently, right now, in their prospectus, they never tell us, how many percentage lah. Okay, and marketing, of course, is quite important because they plan to grow also in Singapore. Okay, so marketing activity is quite important. So take note, all right, as they go along, okay, they reveal their percentage. I'm hoping, okay, that more budget will be placed on here. Yeah. So again, they want to allocate for their new office. Okay, the new head office. Okay, I understand that. Okay, maybe the old office right now, you want to move to a bigger company, okay, bigger place, so that can consolidate all your manpower into one same place, make it more efficient. I understand that. Okay. The most important for me, that as I go through the prospectus, is this central kitchen, which I think is quite brilliant. You know why? Simple. When you have a central kitchen, right, what they tell us is that this central kitchen will carry out a lot of the heavy workload when preparing the foods. Okay. And because of this, right, the cafes, each of the cafes, they do not need to waste a lot of time, okay, and use a lot of manpower to prepare the foods ready. So the cafes will carry minimal final preparation. Okay, so it's quite good. So the end result, having a central kitchen, is they have smaller space already. Okay, smaller space, which means the kitchen, because for a F&B business, right, the more space you have to serve your customers, the more revenue it is. So right now, because of the central kitchen, you don't need to allocate more space for the kitchen already. So they have a much smaller space, more space for the customers. And not only that, because you have a central kitchen, you don't need to hire more people to prepare the food already. So you reduce your equipment, okay, because central kitchen is already prepared, right? You reduce the number of workers, all right, and then which in turn helps us to reduce the cost. Okay, so what this telling me is that, remember when I said that the margin pressure right now that they have been dropping? Yeah, so having this central kitchen will definitely help control the margins. Yeah, control the margins by reducing cost of each cafe, and then having a centralized kitchen to spread out all the cost together. Yeah. So because you can see here, if I'm not wrong, don't expect this effect immediately for the next 1-2 years, because the central kitchen, the warehouse, the head office here, they need to take 3 years actually. They need to take 3 years. So don't expect for the next year, next 2 years, okay, the margin pressures will immediately improve. Okay, especially right now, you all know, okay, food prices, cost, okay, and especially the diesel and RON 95 also, there's a sign that they will increase the price already. All right, so there's a lot of margin pressure in this business, okay, until the central kitchen is done. Okay, so we need to monitor continue. Yeah. Okay, what's next? This is the one. Remember when I've view on their dividend policy? Okay, you see, now the board, the management, right, they intend, all right, to distribute 30% of the profit, okay, after the listing. Okay. And not only that, okay, for the financial year 2024, they plan to increase, okay, the dividend total payout ratio, the dividend payout ratio to up to 50% here. Now, here is my take. Because you see, do you know how much total dividends they are paying? Now, just based on the latest year, okay, this is my thought process, okay. Right. First thing is this, because you are quite a new company and you just gone IPO, all right. Your main purpose right now is to grow the company, make your shares even more valuable, okay, and make the shareholders, of course, wealthier lah. So you need to make your company bigger. So your dividend here in year 2023, you paid 11 million, right? You paid 11 million because you see, very simple. They paid 8 million. Then in February 2024, they declared another 3 million. Which of course they consider it as financial year 2023 lah. Yeah. So in total, okay, the dividends declared are 11 million here. Now, you see, as I go along, right, you pay management paying themselves. Now, I'm not saying that it's really, really bad. Okay, I understand all people, when you run a business, you want to make money, you want to be profitable, right? Okay. But it's about, the strategy, and how the management, the vision, okay, for this company. Because you see, the cash flow, right? I want you guys to focus on the investing activities here. Okay. As you go along, you see, in financial year 2023, right? This was mainly attributed to the purchase of PPE, property, plant and equipment, which means they spent 13.64 million to invest in the capex, okay, to maintain or grow the cafes. You know why? Because these are furniture, renovation, kitchen for a cafe and stuff like that. So what you are telling me is this: in that 1 year, all right, your cafe, maybe, I don't know, they never give us the details. Okay, they only tell us straight they have 14 cafes currently. But I want to know on that particular year, how much did you grow? Because let's say maybe 3 or 4 lah. Okay, maybe 3 or 4 cafes, and you need 13.64 million, okay, to grow this cafe. But you are telling me that you are paying yourself 11 million, and that's almost 13 million here, the capex needed to grow the cafe. So my view is this, is that, if you didn't pay this dividend, you will have an extra 11 million in the company. So instead of growing maybe 3 or 4 cafes, isn't it possible perhaps that you can, because of the extra cash right now, you can have grown maybe 6 or 7 cafes in 1 year already? Because you have more cash, you can grow even faster. Am I right? Okay, so this is my view here. So that's what we call, I feel, opportunity cost. Opportunity cost. So you want to pay dividends, by all means pay. Okay, but up to this point, I'm a bit disagreeable, okay, on this amount, 50%. It's really quite high. Okay, for a company that currently only has 14 cafes, there's still a lot of runway. You can grow until 100 cafes in the long run. No issue, because other cafes have done it. Okay, so you are essentially, slower, making your growth slower in a sense, slower. All right, because you see how much are they growing later? I will tell you later. I will tell you the growth that they plan. Okay, the growth that they plan. See the growth. So the growth here, they want to grow domestic and foreign. I understand that. Yeah. So this is their plan to tell us. They want to grow, In 2024, a total extra 6 cafes. But the funny thing is, in 2025 and 2026, they plan to grow 5 and then 4. Okay, now we as a shareholder, now this is something that we need to think a bit critically already, because using your internal generated funds, right, you can grow six cafes, all right. But right now, okay, with the IPO proceeds, shouldn't you have grown faster? Because you now have internal generated funds and also the IPO proceeds, which you tell us you want to use it to expand, right? Shouldn't you have grown maybe, you tell us 6, then 7, then 8? That then invokes confidence for shareholders, and then shows us that you really allocate your capital in a better way. But you are telling me here it's not really a good sign because it's decelerating growth. 6 cafes after IPO, I only grow 5, and then the next year I only grow 4. So I do not know what's the long-term plan. Okay, maybe this is just a prospectus. I do not know whether they will grow even faster after that. Okay, but based on your prospectus, you are giving a hint, okay, that the growth is not as fast. Yeah. So, and that's the thing, because a lot of opportunity costs. So the dividends, okay, I feel during this early stage here, all right, it shouldn't be that high. I mean, this is the only thing that I'm against the how they want to how they want to grow the company lah. Okay, it's still quite high during the early stages. Your goal right now should allocate your current cash. Okay, let's say for example you are using this 13 million here, right? Okay, if let's say, okay, maybe you only pay you only pay, don't pay until 11 million lah. Maybe 1 million, 2 million first. You still have another extra 8 million. So you have another extra 8 million that will have contributed an extra maybe 2 cafes for you. Okay, to grow the business even faster. Right, am I right? Okay, so this is my view, okay, as a shareholder. Yeah. So going back to their growth, to their growth. So it depends on shareholders, how to say, aim of investing in their IPO here. Yeah. Because I already done the calculation. Yeah. So yes, it sounds nice. Oh, 14 cafes, I grow 15 cafes. Wow. Okay, it seems quite a lot. But you need to understand, you see, in 2024, you say you want to grow 6 cafes, right? Currently at 14, ma? Okay, let's say you want to grow 6. So in 2024, you will have a total of 20 cafes already. So by growing 6, you compare to their 14 cafes, 43% growth. Remarkable, not bad. But as time goes by, you have more and more cafes, right? So in 2025, you grow by 5. But that is compared against your 20 cafes here. So your total growth is only 25%. And then the next year is 16%. So it's actually what you are telling us, because I'm not, making up the numbers. You are the one that tells me you want to grow 654. Okay. So what you're telling me is that your growth are declining. So how about 2027 to 2030? Okay, you never tell us, of course, but judging from your trend here, okay, if that is your pace of growth, I'm just giving 5 lor. I take the middle number 654, I take 5 So let's say you can only grow 5 per year. Okay, not bad. Okay, as a shareholder, wow, I can keep on adding 5, 5, 5. But you need to understand, as a company with the IPO proceeds and with your cash generating business, by right, you open more cafes, you should have more and more cash, right? Because I can see that each of their cafe is quite profitable. So they should have reinvested back, open even more cafes, to grow even faster. The more people see your cafe, to be honest, you will even build your brand even more. More famous you are, people know it, right? So you see, they need to grow 555. So as time goes by, your cafe is getting more and more. So you are growing at 70% only, 15%, 13%, 11%. If that is your pace of growth, you decided to add 5 per year. Okay, so this is not something that I really want to see, okay, when I invest in a company. Because we investors, shareholders, right? We want to invest, we want the share price to go up. And the only way to do that is the company get bigger, the revenue get higher also. Yeah. So the total revenue also same thing. Imagine your total revenue growth, okay, 43, 25, 16, then continue to drop 17, 15, 13, and 11%. Okay. So it's not really that nice to see for now. Yeah. So based on prospectus, this is what they are telling us. All right. So maybe perhaps in the future, the management can give a much clearer picture on their future trajectory. Then as time goes by, if there are more information, then we can make better decisions. Okay. Yeah. So again, I only have an issue with their dividends. Okay. And their plan to grow the company. That's all. Okay. Because you see, if they give dividends a lot, let me tell you this. These people are the ones that benefited a lot. Okay, because they hold 73%. 11 million, that means 7 to 8 million goes to their pocket. Okay, I'm not saying it's wrong because they are the ones that through their blood and sweat build up this business, right? Okay, but we as shareholders, if you give dividends, let me tell you, if you invest 100,000, right? a 6% return is still only 6,000 a year. It's not really life-changing. Okay. Yeah. So this is the thing. Okay, there are dividends. They want to give, can you want to reward yourself some yes, to your hard work for 1 year, can, but not that high, up to 50%. Okay, at this current stage, because they still have a long runway. 14 cafes only. Hey, why not? Okay, you can grow until 100, no problem. Okay. Then the next one is their growth. Okay, their growth plans are okay. 654 here doesn't really invoke confidence. Okay, because you have internal generated funds, your all cafe have earn a lot of money. Okay, and then you have IPO money to help you some more. So it doesn't really justify a slower opening of cafes. Yeah, you should have maybe 6, 7, 8, okay, or at least give us all the same 6, 6, 6 like that. Yeah. Okay. So this is the end of this video. Okay, I hope that throughout this short sharing here, give you a bit of a clearer picture and information. Okay, for you to make your own decision whether you want to subscribe to their IPO or not. All right. So thanks for watching. I hope this video has benefit you guys a lot. Thank you guys.